Hi, everyone. Ever since we released our ebook called Money Masters, we've been getting a lot of questions. And because there's so many of them, I'm going to put a Q&A, question and answer, module on our website, and that should be up in probably early next week, answering there's so many questions that have come in. One of the questions is, do you use stops? And if so, where do you put them? Now, for the Money Master strategy, it's a little different than when I'm trading actively in the futures or the stock market or Forex. When I use stops, they vary from 15 to 25%. Most of the time, it's 25%. The 15% stop is used when I'm pretty sure I'm going to be knocked out of the trade. So if things are not looking good, I'll move the stop to 15%. The stop loss is used for the active trading strategies where I'm not trying to grow dividends. But today I want to talk about mostly the passive ways of trading, where I don't use stops at all when I'm positioned in world-dominating stocks for the long term, with the purpose of compounding dividends. If stock prices drop lower, I can grow my shares faster. It has been proven that shares in great companies do not fall as far as the overall market. And during those times when they do fall, the companies continue to pay, and in many cases even increase their dividend. Often they will even buy back shares at the low prices, which increases the value of the shares I own. The goal with dividend accumulation over long periods of time is to never break the dividend flow. If you sell the shares, you will have broken the compounding effect of the dividends. Okay, so this is the passive strategy that I wrote about in the first parts of the book, where I put my stop. The answer is I do not put my stop in the market. Placing stops in the stock market is like buying a $200,000 house, moving in and then putting a for sale sign in the front yard offering the house for $175,000. Either keep a manual stop or use a service like tradestops.com or Yahoo. Yahoo will track your stops for you and alert you when your stop is in danger of being hit. Never ever place your stop with your broker. It's an invitation to steal. Enter your stop in the market only when you actually intend to exit the trade. Overall, I don't place more than 4 to 5%, usually 4% of my portfolio in any one investment. I recommend keeping a mental stop loss of 20 to 25% of the capital at risk. Exit the trade if you hit your stop. We don't ever want to lose more than 1% of our capital on any one position. So if I'm in at 4% of my portfolio and I get hit at 25% of that, I lose 1% of my capital. If I'm in at 5% and I use a stop loss of 20%, then the most I can lose is 1% of my capital per position. Now we're talking about a philosophy and mindset that's really difficult for most people to understand. The majority of people who trade in the stock market are looking for quick profits in explosive stocks. They want growth. They want the next Microsoft or the next Google. But the strategies of Money Master are income-producing strategies. While it's nice to see our shares grow in value in a bull market, we will also welcome bear markets because of two very important things. One, we have the opportunity to grow our shares. Hold on a minute. We have the opportunity to grow our shares at lower prices for the part of our portfolio that is passive, with mostly reinvesting dividends. In bear markets, when fear is high, we get supercharged premiums for the options we sell. We have seen options selling for exorbitant amounts of money when fear and consequently volatility are very high. Keep in mind also that when volatility is high, not only will put premiums be high, but call premiums too will be very high. Now, over here on the screen, where you see this chart, this is a chart of IGD. It's a global equity dividend and growth fund. And I happen to like it a lot. I've been in it a long time. And just to show you how these things can work out, I originally bought 5,000 shares and reinvested dividends, and now I have 5,573 shares. And the original price was $9.60 a share for the 5,573. That's my average price. Okay, so my gross investment was $53,500.80. But over the years, it's been about almost 5 years, I've accumulated dividends of $39,351.45. So my net investment in this now is $14,149.34, round 35 cents rounded. Okay, so my price per share right now is only $2.54. If I keep collecting dividends, pretty soon they're going to be paying me to own the shares. Right? My price per share will be zero and then eventually a negative number because I will have collected so much money from them. So this just shows you how it works. When you have things like this that you want to hold forever, you don't even use a stop. Okay, you just let everything grow, compound. I had thought of showing you a chart showing one of the setups we have for our seminar in April, but I decided to give you this one instead. You can get all this kind of information from very passive to very active in our book, ebook, Money Masters. But I also want to invite you to our April seminar where we'll show you really how the markets work and how to make money in the markets. Until then, until the next chat,